kind of have first-hand view of what's going on at the fundraising stage. So take it away.
All right, great. Well, thanks for the time today. Are people fired up? Yeah, that's what I'm talking about. So thanks for making it tonight. I thought a lot of people would stay home because of the election and depression, but it seems like people are upbeat and out, which is great. So a quick bit about me. I started off very much as an entrepreneur. So I started one company that Twitter bought back in 2009. I then am currently the founder and CEO of another company that's focused on using software to drop the cost of genetic testing. I've also functioned as an operator in very high growth scenarios. So I joined Google when it was 1,500 people and left at 15,000. And then when Twitter bought my company, it was about 90 people and I left at 1,500. And I think those high growth opportunities are often very informative in terms of how you think about company scaling. And then lastly, I'm an investor in a lot of companies like Airbnb and Stripe and Square, Pinterest, Instacart, Zenefits, Gusto, and the like. So basically, I was going to hope to divide it into two sections. One is thoughts on markets and the current market, and then talk about the end of a cycle, because I think we're sort of going through a big transition from a venture cycle perspective. And this is probably going to be pretty fast, so I'll leave time for questions, and if nobody has questions, then good for everybody from that perspective. So my first question is, what do people think is the most important thing for a startup at the very earliest stages? And so I'd love to just see a show of hands as I sort of hit the thing that you think is like the singular most important thing. So first is, do you think the team is the most important thing? So a handful of people think it's the team. Do you think it's the market? One hand. The product? 2 or 3 people. Luck? And then lastly, the proportion of hipsters that you have on your team. That's actually what I think is really the driver of success. So I actually think it's the market. So a lot of early stage investors think it's the team, and if you have a great team, then you don't have anything to worry about. And there's this quote from Andy McLoughlin, who's the founder of Benchmark, where he basically says, if you have a great team in a terrible market, the market wins. If you have a terrible team in a great market, the market wins. And if you have a great team in a great market, something magical happens. And I think really what that shows is that even if you have an amazing group of people in a terrible market, I think you're going to fail. Because I think a lot of startups also try to pivot within a market versus between markets. And ultimately what that means is that they're just in a bad area and they're just not going to find any sort of good fruit of their labor. And so what I'm going to talk about is how I think there's been a shift in terms of what markets are important and also how people are now seeking sort of the next big phase or the next big thing. And I think there's a bit of a gap going on right now. So I think we've just been through this period where we've hit what I'd call like peak app or peak consumer products. So we had a big wave of different products, and obviously there's a lot more than this, but we had a wave of social that basically started off in the early 2000s and then lasted more or less up until the mid 2000s. Now, I think Snapchat is sort of the very end of that trend, or maybe Snapchat and Uber. And there really isn't much going on the consumer side from the perspective of breakout companies. And so I think that we've hit a gap there. And the interesting thing is that if you actually look over the last 20 years and you ask what proportion of the companies that are worth, say, 25 billion or more, or 50 billion or more, that was started are consumer versus anything else on the planet, enterprise companies, biotech companies, you name it, you'll find that basically everything was a consumer internet company or consumer software company. So, in the mid 90s, that would be things like Yahoo and eBay and PayPal. That then shifted to Facebook. Obviously Google was before that. And even the biggest sort of SaaS companies ultimately have some sort of ceiling on them, at least in terms of sort of fast time to valuation. And if you look at biotech companies, the biggest one I can think of is probably Stemcentrx, which exited at an enormous, I think it was like 6-7 billion realistically. But if you compare that to a Facebook at a few hundred billion, it's a much smaller outcome. I think it's an amazing outcome, don't get me wrong. I'm just saying it's smaller, right? And that's the biggest success you can point to in biotech in the last 20 years. Oh, hey, sorry about that, thank you. And so I think that there's been this, this real enormous value creation, largely through consumer companies, and then to a lesser extent, a lot of more like enterprise companies doing well as well, but other sectors have sort of suffered. And so, I think the big issues are there's no new platforms, so we had this wave of both the internet sort of broadening as well as mobile. We have attention saturation, so people have that one thing in their mind that they can use for a certain thing. And we also have slowing internet adoption for higher GDP countries. And so that also means that you're going to have fewer opportunities for things to sort of continue to grow. So for example, Facebook's growth at some point will have to slow, just given the penetration that they have in the market. And so the big question is sort of what are the next fundamental services that can be quite large? And I think similarly, there's been a real gap in breakout companies in the last year or so in terms of things that are worth a few $100 million that are obviously going to go to $5 billion or $10 billion. So if you go back 3 or 4 years, that was Uber and that was Stripe and that was a lot of these sort of more breakout companies. But right now, there's no company I can think of where if a friend asked me where should I go, that I could recommend that's in that sort of mid-stage. There's a lot of really interesting late-stage stuff like Slack and Uber and Airbnb. And there's a bunch of early stuff which is promising, but who knows? But I actually feel like there's no sort of middling company right now. And I think that's reflective, again, of the fact that we've hit a gap from a market perspective, where there's just sort of these, it's uncertain what's really going to be the next massive wave of companies. Whenever something like this happens, and this happened, for example, in 2000, founders start to shift into areas that are harder. So people say, you know what, I'm done with this social stuff, and I'm done with this ad stuff, and I'm going to work on really hard problems. And I'm actually working on a hard problem, right? I'm working on software to deal with cancer and other things. But fundamentally, I think that that's usually a sign that people are going into search mode to try and find something to do. Because I think a lot of the obvious internet stuff or consumer internet stuff is gone. And I think that these are some of the areas, and this is my own ranking of things in terms of tractable, in terms of building potentially an interesting business, in the areas where I think it's like, I'm not sure that actually a giant company will emerge in that area. And I've been wrong on so many things before, so obviously take this with a grain of salt. I'm sure that 3 years from now it'll be the opposite, and I'll be like crying into a beer yet again, like every night. I'm just kidding about that, but people took me seriously. So the first is verticalized AI. I think that's an interesting area. People talk about that a lot. I think the one thing people don't talk about is actually underlying hardware systems for AI. So if you think about it, a lot of people are buying these NVIDIA GPU clusters to basically run machine learning models on, and it's not really a chip that's optimized for machine learning applications, which is really just matrix multiplication and then fast, I/O. And so I think there's a whole set of companies that can be built there that'd be really interesting. And by vertical AI, I mean the application of AI to verticalized product areas. So AI is not the product, it's more like your product is something that makes shopping easier and better, or whatever it may be, but AI gives you an advantage to it. I think general AI is something that's 10 years, 20 years, 50 years out, and I think that's a terrible area to start a company unless your plan is to flip it, which is a perfectly legitimate thing to do. I think there's tons to do still in data infrastructure, in SaaS and APIs, in genomics, digital health, and then once you get to things like IoT, I think most IoT is actually really hard for a variety of reasons because you have infinite customer churn when you're dealing with just selling a consumer product, unless you have a recurring revenue stream, which is the IoT with recurring revenue. So like a drop cam where people are then paying you $10 a month for something. I think then that becomes an interesting business. I think education is a terrible market. I think all of us who want to change the world want to do something there because it's so messed up in so many ways. But if you think of who the buyers are in that market, again, as a market-driven investor, parents don't want to pay for anything in the US, teachers don't have any money, and school systems don't have any money. So you just don't have anybody to pay for a service even if you hit scale. So I know a lot of people doing ed tech companies right now, and I worry that the vast majority of them will not succeed. And then AR and VR. I think Oculus was the giant splash that, predicted 10 years from now it may be interesting. But I think actually standalone AR, VR companies are probably not going to do very well. And again, I could be totally wrong on that. But I think it's not going to be a real trend right now. And it's sort of like the first substantiation of pen computing in the early 90s. And then it took another 12 years before you had a real smartphone. I think the same thing may happen there. So as an investor, when I look at this, I try to sort of focus on the areas to the left, but ultimately, I also try to ask what's the entrepreneurial community doing, because honestly, that's where the most interesting things come from, and we can touch upon that. In general, when you go through this big cycle where everything seems to be amazing and working and all these great companies get formed, and then things start to slow down and people go into this search mode of saying, I'm going to try hard tech, or I'm going to do food tech, or I'm going to do all these different things, you see common patterns. The first is that the funding environment shifts from something where the entrepreneurs are really driving the agenda to a situation where VCs are driving the agenda in terms of what's considered interesting. And so I'll give you an example. In the early 2000s, after the first internet wave sort of crashed, a lot of people started funding clean tech. They're like, clean tech is the future, there's going to be massive companies that are hundreds of millions of dollars poured into it. But it turned out it was a VC-driven phenomenon. Really, it was the venture capital community that was pulling people from universities into these companies versus a lot of organic activity in that area. And I think similarly now, you're seeing VCs start to fund all sorts of things or have theses around what's interesting. And I think that's usually a sign that nobody really knows what the next big thing is. Because during clean tech, the big thing was actually that all the social companies. That's when LinkedIn was founded. That's when Facebook was founded. That's when, a variety of these companies actually got up and running. And so the entrepreneurs were doing the stuff that really mattered, and the investors were distracted by this thing. And I think like 3 or 4 venture funds were ruined by it, literally for a while, for a decade, because they were focused on something that they thought was interesting versus what the entrepreneurial community in the market thought was interesting. Usually when people start to focus on hard things like clean tech, that's a sign as well that we're sort of ending a cycle. I think hand in hand with that, as we start to see VCs give tech valuations to companies that are in completely different industries with different margin structures and growth rates and everything else. And so, if you have a software business, usually it's a very high margin business. Usually your cost of goods is close to zero. It's really about the people that you hire to build the thing and then having a distribution channel. That's very different from a food tech company where you have a supply chain and you have distribution and you have product recalls like Soylent. It's a very different type of business, but people are applying tech multiples to it. And I think that's going to end really badly for those investors who are assuming they can make the same kind of money off of a food tech company as they can off of a software company or a consumer app. I already talked about the clean tech example. Again, it was a VC-driven shift. People lost hundreds of millions of dollars doing it. There's no real outcomes outside of Elon Musk companies, which I think is like, there's almost, I don't know if people know about like the great man theory of history, where there's certain societal waves that happen just because of the mass momentum of people moving in a certain direction, and then every once in a while you have a leader pop up who changes the course of history. And I sort of view Elon Musk as sort of one of those rare characters who's really pushed history forward versus been part of the swell. And so, if you think about it, the big clean tech outcomes were basically Solar City and Tesla, and that's it. I mean, I'm sure there's 1 or 2 smaller ones, but fundamentally that's where success has come from. And then I think all this is tied together by there wasn't a clear why now statement. Like, was there fundamentally a shift in how energy was priced? Was there a technology shift? Like, none of those things existed. And so I think that's the single most important question to ask when you're looking at markets is something fundamentally changed? And if so, I think there's really exciting things that can be done. So I guess the question is, what are the things that may be interesting now, and what are areas for potential exploration? The first one is, I think that there's this really interesting delay in time between things being built and used at places like Google and Facebook, and then sort of hitting the rest of the tech world, and then hitting the rest of the world. And so time and again, you see that from the perspective of infrastructure that's developed, technology that's used like MapReduce, which is basically Hadoop, as well as from the perspective of just like internal tools for things like making your support team more effective or efficient, and then you see 5 years later other companies actually doing that as a service for everyone else. So if you've worked at one of these larger companies, you may actually have 3 or 4 services that you've used internally that could be really interesting standalone companies that can sell to other enterprises. Second, I think there's going to be an enormous wave of team buys in AI. I think just like 6, 7 years ago, there was a wave of every company buying a ton of mobile talent because it was a new thing. I think there's going to be tons of companies buying AI talent. And so I think if you're actually working on a machine learning problem, the nice thing is I do think that there's more of a safety net there than there is in any other area right now. Because even if you don't succeed as a vertical machine learning company, I think there'll be lots of buyers for what you're doing purely on a multiple per headcount basis. By the way, everything that I'm emphasizing is very financial and it's not intentional. Like, I'm personally working on something that I hope can really change the world, and I'm using this again from the investor viewpoint because that was really the topic of tonight. So, as an entrepreneur, I'm like, what can you do that's amazing, and how can you change people's lives? And that's really important. But I'm just sort of trying to be very pragmatic in terms of that other side of things. I think on the consumer side, the big question is what will actually be interesting and what will work, because I think there's still massive opportunities, and if I knew what they were, I'd like go help with that, because I do think there will be some additional outside successes there, but I do think a lot of the things that people are sort of looking at in consumer right now are things that will sort of grow really fast and potentially crash out, like a Musical.ly or some of these other things that I think gets lots of early traction, but it's hard to sustain. So I think it's still a ripe area. It's just much harder than it was when there was a lot of sort of green space before. And then, ultimately, back to the idea of there's this end of cycle, and investors start trying to suggest what's interesting, which is exactly what I'm doing here, which means it's a giant mistake. It's really what organically you all and the entrepreneurial community come up with. That's probably going to be the most interesting next wave. Just like all these people, started investing in clean tech, and then it was all the social products that ended up being, the really big, interesting companies. I think the same thing is likely to happen in the next year or two, where there's just going to be an unexpected wave of stuff that happens that suddenly everybody will jump on. And, I don't know what it is, and organically it will emerge, but I'm really excited to see what still comes. So that's all I had prepared. I don't know if people have any questions. Back there, please.
If you guys would come up to the mic, if you don't mind. We don't have any mobile mics, so if you don't mind walking up here, please.
You basically mentioned like AR, VR outside of gaming, not having many applications, and or being at least much harder. And I'm curious as to why you think if it helps reduce costs for companies that B2B solutions, like why do you think it's too early for that?
Yeah, it's a great question. I think it's always possible that certain niche applications will emerge, or vertical applications. So I've heard of companies working on AR or VR for medical applications, or for other B2B services. And it's quite possible something big will emerge there. Like again, this is just my lens, and my lens has been an awful lot. I just think that some of those markets that I've heard people talking about are actually really hard markets. So I think selling new tools into certain aspects of healthcare, and it really depends on what it is, because there's such a broad range, can actually be really hard. Like I've heard of companies who are doing it more as helping patients overcome trauma, or people overcome trauma, and there's other things where you're saying it's going to help me train somebody to do surgery, which is a completely different set of spectrums in terms of actual applications. And for the latter, that's actually a really hard market to distribute in, depending exactly on what type of surgery and what sort of who you're selling to and all that stuff. And for the former, I don't understand the real science behind that well enough, and I don't understand distribution well enough. But at a high level, that similarly seems like it could have challenging characteristics. But again, if you create enough value, it may be worth it. I think the hard part is that a lot of the markets that I've heard of, which have largely been things like healthcare, oil and gas, a few other things, I actually think either they're very consolidated oligopoly markets that are really hard to get enough payment per company for, because there's a small number of them, and so they can really push down pricing, or they're really hard to distribute it, and they have very long sales cycles, and the buying behavior is really strange, like certain aspects of healthcare. So that's the reason I'm worried about it. It's less about can the technology be valuable, and more it could be really hard to actually sell the thing.
Cool, thanks.
Thanks for your talk. My name is Nate Ani, and I'm a founder of a edtech startup. So I was curious about your comment about education and being a bad market. And we started out in higher ed, and where we're actually getting the most traction is in corporate education. In particular, companies that are borrowing from the MOOC phenomenon and actually starting to incorporate that into their, as another avenue to train and get job skills for their employees up. So I'm curious what you think about that trend, and if education is you sound like you were just thinking K through 12 and higher ed, and I'm wondering if you can think more broadly about the whole education space.
That's a great point, and you're going to understand education much better than I. And I should say, I put up this list that I'm going to have to run for the door in terms of offending half the people in the room. So apologies to anybody that. Yeah, I absolutely think K through 12 and higher education are really, really tough for the reasons that I mentioned, in terms of it's really hard to actually find people who will pay for certain things. And I think on the corporate education side, it really depends on what it is. I know that there are all sorts of products around employee onboarding, which I actually think are pretty interesting. So actually training your sales force initially on your product, or training them up on certain things. To your point, there may be other aspects of corporate education. It might